few weeks ago, I was doing some preparation for this panel, and I came across this Time magazine headline from 2005 that said, in big, bold type, "Why the U.S. is running out of natural gas." And it laid out, the story laid out this alarming scenario about how demand was going to outstrip supply, prices were going to skyrocket, and the only solution was for companies to build billions of dollars worth of import terminals dotting the various U.S. coasts and start shipping gas in from Qatar and other places. As we all know, none of that happened. You know, the North American shale boom sort of flipped the global gas market on its head, creating an oversupply in the U.S., and that cascaded through the rest of the world. So you have the U.S. now exporting gas along with Australia and other countries, and they're sending that gas into an already oversupplied market. So how deep is that glut? How long will it last? And how do LNG buyers and sellers use this oversupply to their advantage, and sort of what comes next? Those are the questions that we're going to address today, and I'm happy to have three experts with me who can, I think we'll have a lively discussion on all of this. Excuse me. To my immediate left is Massimo Mantovani. He's the Chief Gas and LNG Marketing and Power Officer for Eni. Then we have next to him Frédéric Barnaud, Chief Commercial Officer for Gazprom Marketing and Trading, at least through the end of the year, as I understand it. And finally, Shaun Davison, Senior Vice President, Development and Regulatory Affairs for NextDecade. So I think I'm going to start just by sort of tossing each of you the basic question. How big or how intense or whatever is this LNG oversupply or global gas oversupply? Is there a global gas oversupply? I think there may be basic debate over that. And when do you see, what year, what month, what date, whatever, however you want to put it, when do you see that market coming back into balance, and why? I'll start with you if you want. Massimo?
Well, let me say first that I'm really sorry that the scenario you mentioned before about USA running out of gas did not happen. And but you know, not always is as you wish. And yes, we do agree there is an oversupply, but we have to be careful in saying, because when there is a spot price in Asia like now above $9, speaking about oversupply, it may be not completely correct. On the other hand, you do have prices which are low during the summer, and you do have quite low Brent slope on medium long-term contracts. When it's going to be over? Everybody thinks about 2022, 23. We were first trying to discuss about which month and which day. It's difficult to locate that. And probably, as it was said today during the lunch break, we had Otto saying that he's rather skeptical on the increase of demand. This, of course, will push the situation much longer. And I think the answer is on us, because we have on one hand to try to increase the market, to create new market, especially in developing countries, and that is not an easy job, and it takes time. On the other hand, we have to make sure that LNG will be competitive. That is not only on pricing, which means cost reduction, but also on being competitive on flexibility in what we offer. And we also have to look at gas advocacy. The carbonization is fundamental, and that is really on the gas business to try to push for that. So we stick on 22, 23, but of course there is a lot of issue we have to look at.
Okay, Frédéric?
I think when NextDecade will deliver the first cargo is when the glut will disappear. I guess I don't care so much about the surplus ending in 21, 22, 25. I'm much more interested in the dynamics of the market, and as was hinted earlier today, the way the molecules will come to the market in 25 depends a little bit on what's going on today. And that has been changing quite a lot. So, I mean, JERA was a good expression of that change, and they've been sometimes more forceful than today, the suppliers as well. And today it's very difficult to see how you can match suppliers and buyers. So it will really depend on what's going to be done in the next sort of 3 years. I don't see too much of supply excess today, to a point that effectively we have to clear cargoes at $9, possibly $10 this winter. My traders have got a lot of hard time because they were short earlier in the year, like the herd, and lost a bit of money and got a few kicks. But at the end of the day, last year we said, well, there'll be a glut. Market went from 6 to 10. This year we said there'll be a glut. Market went from 6 to 10, more or less, maybe more, we'll see. And the good thing about that is not that we've lost supply, is that this is demand driven. And that's where I'm reassured. It's very much growth of more than 10% on the LNG market this year, which is driven by demand in China, even demand in Europe, even in India, and that's extremely positive. And we see one thing, which is effectively the market is answering to what you would expect in terms of economic behavior. Additional demand is effectively locked in because of cheaper prices, and because of additional supply coming into the market, and because of additional infrastructure coming in the market through the FSRUs and etc. So, and that is extremely positive. However, on the medium term, I was saying we still need to sort out a little bit the market order, or at least that it finds its own balances, so that effectively people will be comfortable going into FIDs, going into either smaller or bigger projects. We can debate that. And then it will happen in rebalancing in 22 or 2025. I don't know, but it depends who you ask to. But I wouldn't bet on that in any case, because I don't know what's a market surplus as such. I know what's the market dynamics, and sometimes it's twisting a little bit too much, then it's okay or not, depending which side of the market you are. But in between those extremes events, there is so much to do. So that's, I think, where we are today. Obviously, if you plot the charts of all the US projects, Australian projects starting next year and the year after, but LNG is not going to be vented. So it needs to go somewhere, or production will have to stop. Additional markets are coming in through Africa, through Middle East, through Asia, and that's very, very reassuring.
Shaun.
May 12th, 2021, AM. There's been so many distinguished speakers today, and it's hard to find anything new to add, quite frankly, on the discussion. On an individual level, I have unshakable faith in the FSRU industry, having come out of that, to create those new markets. So I do think there's going to be some level of supply absorbed. Certainly when you see how it worked historically, Argentina got one, got a second one, Brazil, 3. Everyone's been talking about Pakistan. First one goes in, second one's ready to go, and then they're talking about number 3 and number 4 and 30 million tons. And so if a country can get through that challenge of that first one, then there's an element of a crack cocaine to getting natural gas, and that sucking sound starts to happen. Hopefully that will come with China. So certainly I think that end, I'd like to think it's going to be early in the next decade. The sooner the better for NextDecade as a US developer. One thing I hadn't heard today was the at-risk production. And everyone's starting from the production we have now and saying, what's the incremental demand growth? But there are areas in the world now that are looking at, some challenges. I think Trinidad and Tobago, what will be the production level there out of Atlantic LNG? Is anyone going to go back to Yemen, given the challenges there? And there are several others. Some countries now, the internal gas demand, making it very difficult going forward with production. I think Oman might be in that situation. So we're not starting from a base and then adding demand. There's also potentially some demand that will come off the table. And then, of course, being in the US, I'm slightly biased, as you can imagine. But the challenge now, and we've heard it from several distinguished panelists, that cost is a real driver. And so, having seen Australia and the example of how those costs started to escalate when you're in a remote location, what does that mean for Mozambique? Is it really going to come online? We've seen Western Canada start to hemorrhage projects. And it's not a cheap play. I think, is it Petronas that talked about 800 million of investment there, and now to walk away. So from the demand standpoint, I don't see it. The planet's still in play. I think you're narrowing it down to a small band. Once you get to the US, again, there's some challenges within the US. The West Coast and the East Coast. You run into and I'm sure you guys, the banana and the nope syndrome. And if you're not familiar with that, it's build absolutely nothing anywhere near anything. And nope is not on planet Earth. And so as you start to drill down, even in the US, you're probably west of the Mississippi. And so that's Louisiana and Texas. And there's a lot of projects lining up in that area. But the bandwidth for channel, for site, the emissions, it starts to narrow down, and the volumes you're talking about for these projects is tremendous. In some cases, it's the gas demand of California or New York City. So they're not all going to go in the Calcasieu Channel. They're not all going to go in the Sabine Pass area. And so as you start to peel the layers away, on the demand side, there are some challenges, and there are maybe one or two fundamentally sound projects that have a chance. On the supply side, with the FSRU world, I'd like to hope there's this real ramp up. And then even within that, I think we've touched on it, the opportunities for the bunkering, the fueling, and you see that starting to happen now across the industry. I mean, smaller areas, Jamaica's looking at LNG. We're looking at a project in Ireland. So there's some interesting dynamics moving forward. So I'd like to think early next decade is when we start to see the supply. Even sooner would be better.
Great, and I want to get back to the demand creation question, but sticking with the supply aspect. And you mentioned Western Canada. There's been, that was going to be a major, theoretically a major export point for LNG. Lots of stops and starts. No FIDs coming. In fact, there was talk earlier about, there really haven't been a significant number of FIDs. And the question then is, if those projects don't go to development decision soon, does this surplus, such as it is, become a deficit? Because the demand is increasing, and you're having trouble, the industry is having trouble getting these projects off the ground for whatever reasons. I mean, is this a real thing that when we hear about this gas oversupply becoming a deficit next decade? Whoever wants to take that.
I'm not so sure I would say Canada per se. I found it fascinating. Again, there's the gentleman from JERA seemed to be the only gas buyer most of today, and so the gas producers and the terminal manufacturers like ourselves and the marketers are all saying, yes, it's going to be great. If we can just make it to the next decade, we're going to be fantastic. I thought it was fascinating hearing the gentleman from JERA and how cautious he was, and how there's still some challenges out there. And certainly from our standpoint, we've seen that from the gas buyers. I'm not sure, I know there's been, again, discussion of oil and Henry Hub. Frankly speaking, that's an interesting dynamic now. And at a human level, there are companies and there are decision makers who are saying, I don't know which way to go. And so they're postponing decisions. And as long as they're postponing those decisions, while the supply is getting sucked out of the market, it's tightening and tightening and tightening. And I think that just, again, very helpful for someone like us who think we have a very sound project in a very low-cost area in South Texas. So with the buyer indecision for those long-term opportunities, and the fact that it's even a call on the indices that they tie to, and we've seen that even, I should go back, a couple of years ago, folks were charging in to get a Henry Hub link contract, and Cheniere did a phenomenal job, $3, then $3.50. Freeport and Sempra signed up, and most of those customers are very, very sophisticated global energy players. Now they're turning around and saying, can we renegotiate because oil's changed? So it's fascinating to see the dynamic. If oil starts to slide back up, if the slope starts to slide back up, do they start to slide back towards the US and a Henry Hub? And any of that indecision, I think, is helping us because the market's tightening. Right. If you want to buy sombreros, buy them in the winter time, not in the summertime. So they should step in now, but if they don't...
I think though there are buyers out there in the world. I mean, if you look at the Pakistani story, I mean, we talked about JERA, but it's very different. They have a 35 million ton portfolio. They need to change their business model, their organization, adapt to those market changes. Probably the same with the Qataris, the same with, the big players' portfolios that are not yet organized to play in this market. But take the Pakistani, or we signed as well with Ghana, a few weeks ago. These are long-term contracts, 15-year contract. Okay, they are price review, maybe with an exit clause, but still it's 10-year, sort of 10-year horizon minimum. And their proposal was very simple, is, do we care about the flexibility, destination, flexibility? No, yeah, we would in some instances, but we care about the price. And then we launch tenders and we get probably one of the best prices ever in that context. So the sort of pure play, focus on your market, having a political decision, strategy, can say we go for it, works with a long-term buyer. But I guess my neighbor is not selling that on the back of on the back-to-back of a project right now. So, or I'm not selling to Ghana as a pure back-to-back from something else. So in between, we do have to take a little bit of risk, which is either timing, either quantities, either the degrees of flexibility in case we offer some, or pricing risk, etc., to make this happen. But there are buyers there even for mid and long-term contracts. It's just that I don't think there is any reason a US Asian buyer really should buy US indexed, apart from a little bit of diversification, which has already been achieved. So the next purchase in Asia is not going to be US index, or why should it be? And then, okay, oil deregulation, indexation is also here to change, probably take longer time because there is a better correlation to the alternative energy in terms of the power generation, etc. But still, so in between there is this role that our companies are somehow playing is we still want the long-term business, but we have to evolve around it. We have to make things happen, and that implies taking a little bit of risk on our shoulders for some time in a reasonable and sustainable way, but still make those things happen. And what is very difficult today is to effectively have both the long-term buyer that will finance the right project at the right time, and everything is you can tick the boxes all across the sheet of financing and technical operation and timing and all that. That is very difficult today.
So along those lines, I mean, are 20-year contracts a relic, or do they still have a place in the market in this second wave? Do they still have a place in the market once, assuming these FIDs go forward, or is that just sort of a first wave thing gone by, if you want to take that?
Yeah, I mean, if the price is very low, they always have a place, and in particular with mature market. But at a price which is consistent with the investment you want to make on the upstream side, that is more difficult. There is probably still, for a specific market, room for long-term contracts, but probably you have to change the way in which you actually look at the long-term contracts. It's not, you have to insert a lot of flexibility, not only on the price, but also on the deliveries. You probably have to share with the buyer some benefit of a situation in Asia where the market is going up to $10. Probably less talking about destination and more talking about sort of profit-sharing mechanism. So there is still a way to do that, somehow cooperating and making synergies with big buyers. It's different in other markets. If we look at the growth in emerging markets, it's difficult to go there and to say 20 years contract, what can they do with LNG for 20 years? There is a completely different marketing structure. And that probably, in a country like Pakistan, is fairly easy. They already have a gas infrastructure. They were a gas producer. So it's much more an issue of price. But if you're looking of selling in countries where the gas infrastructure is not yet there, then you have to do something more. You have to be integrated. Probably you have to bring along either transporter or power company, and you actually have to build the gas market and take more risk.
And that's the market creation that you were talking about?
That's a market creation, of course.
And that's a supplier-driven.
I would say it's a supplier-driven because we are talking of markets which is not, you're not going there and you're closing in 1 year and everything is done. You have to stay there probably a few years in building up the infrastructure and everything, or trying to stimulate the growth of the market and take some risk. For instance, we were talking before about Panama. You know, yes, you can have a power plant and you can have a regas facility which is bigger than what is actually going to be the power needs. Who is going to pay for that free capacity in terms of future perspective of the market? Who is actually betting that the market will grow? And is capital intensive, may not be capital intensive if you actually set up a cooperation with other companies involved in the chain, along the chain, in particular on the power sector.
And if you guys want,
I think long-term contracts. I mean, this morning Exxon acknowledged that even Exxon acknowledged they don't exist, because if you have to renegotiate your Indian contract each time prices swing on the downside, obviously, then it means it's a contract for best endeavors to supply at some point, and you keep the supply but you adapt the price. So it means it's driven by the perception of the trade and of the market price. So that's the first sign that it's sort of crumbling a little bit in terms of the organization of the market. But it doesn't mean that there is no, especially in this instance, a long-term relationship and supply. But it needs to be adapted, and therefore, yes, killing the price review concept is the first thing that's coming.
did you want to address that?
I mean, it depends. On the downstream side, you know, I think we've already seen, you know, the regas terminals can be very short term. I mean, you pay for it as a premium on the FSRU. The jetty and gas pipeline, that's pretty de minimis in the grand scheme of things on the value chain. So certainly on the downstream side, we've seen short contracts. When they sign up for supply, again, Argentina 5 years, Pakistan 15, so a little bit of everything. On the LNG terminal side, on the liquefaction side, that one I struggle with. Look, these are $8-10 billion investments. It's all very well. The industry talks about how, you know, we're going to be, you know, risk averse and we're going to get out or take some more risk. But as we've seen, the liquefaction end is very different from a cost magnitude than the regas end. So I'm a cynic. I think the new novelty is no novelty when it comes to liquefaction. Well understood technology, land-based. May not be 20 years, but certainly 15. I think you've got to get it financed, but still driving the cost down.
So is that how you see the second wave, so-called second wave? I mean, maybe I can ask each of you, because I think there may be some differing opinions on what does this second wave of liquefaction look like, not just in the U.S. but globally, and you know, where do sort of the FSRUs, the floating terminals, fall into that? I mean, do there have to be small, you know, relatively small floating terminals and 27 million ton mega terminals, you know, working together to meet the demand?
I think you have two angles. The first one is the big projects that effectively are devised at the right time and come in. Not that you FID at you know, when the price is high, but your LNG is effectively in the market when it's needed, and that effectively can come on time and budget with great technical achievement. And Yamal is this one. Amazing. It's there. So there, where the whole power of the industry, the technological advances effectively translate into costs that goes all the way down the chain. But these days, I'm also very much liking the small projects, the ones that we've done with Cameroon, or the other ones that we are putting in the Baltic, the sort of 1.5 to 2 to 3 million ton, that effectively can be matched with either single market or smaller markets that can be aggregated around that, most likely around FSRUs initially, or address a little bit of incremental demand that will be coming from the bunkering side or from the small scale side of things, etc., and keep a bit of optionality, not taking too much risk on the books at this stage. So I think there is a little bit of and that's what we see with the US projects as well. The sort of smaller projects seems to also gain a good traction as long as they can manage the unit cost. But they'll probably be ready and to be taken by anyone who wants to have LNG at this stage.
And Shaun, I mean, your company is directly involved in the second wave, your Rio Grande project. And
again, I think it's differentiating between the regas and the FSRUs and the liquefaction. Again, fascinating. If you go back and look at the regas, everyone in this room probably, if they were in the industry, said that's a dumb idea. And I know because I'd heard you all tell me that. And it kicked off in the late 90s. And it was a Tulsa billionaire who put the money up, and the industry really wasn't too interested. And it was built, and they were running and delivering cargoes into the US, in the Gulf, and in Boston, and in the Teesside facility. And it wasn't until Argentina, because nobody would pay attention to Argentina, that the guys down there said, look, we'll take a chance. We need a cheap solution. And still the industry was pretty much dismissive of it. And it's grown now. And that's a $250 million investment, plus $100 million for the jetty. Now we're getting into liquefaction, and we're talking about 8 to 10 billion. So call me a cynic when it comes to the industry changing its ways in many areas. So from that standpoint, it goes back to on the liquefaction side in the US and the no novelty. It's going to be a fundamentally sound project. I'll pitch NextDecade because our project is designed, has the basis of design as the Peru facility, and that's delivered over 400 cargoes into the LNG market now over the last since 2010. It's being built by CB&I, and so you've seen CB&I building Freeport, you've seen CB&I building the Sempra facility. From a regulatory standpoint, I think it's fundamentally sound. We saw a Northwest project in the US get kicked out of the regulatory process because they didn't run it correctly. There are projects in the US on the Gulf Coast that have not tried to permit pipelines, so they have no gas supply. So folks here really start peeling the layers of the onion away and doing a little bit of homework, especially the consultants in the audience, and taking a look what makes a sound project. There's a lot of holes in a lot of the projects that are in the US right now. And so I keep going back to, on the liquefaction end, the no novelty is new novelty, and when the market turns, there's going to be one or two sound projects where people will be comfortable investing in or being part of because it will go. And then and now people are more willing to take a little bit of risk on the FSRU and the regas end because over the course of time, it's now a little more established. But, maybe we come back in a year's time and you guys, haul me across the stage and throw tomatoes at me because I've been totally off base.
I'll have you here next year, definitely. Did you have any thoughts on the second one?
It's just, reducing the cost base is fundamental, and that actually starts also from the exploration phase. Near field exploration will be key, and as will be key the optimization of facilities, the bottlenecking, configuration, but also project management. The costs have to be reduced. And typical APC contract where costs were developing and taking long times, and also time to market. So there is a way to reduce the cost, and therefore even though we saw in the last basically year only one greenfield final investment decision, and on a big project, wherever you found LNG gas, it will be produced. It's a matter of looking at the cost, maybe even renegotiating the fiscal take. But there will be a way by which it will be produced. The problem comes, like for the oil industry, how much people will spend on exploration in the future in terms of for a period of vacancy. But, at the end of the day, if we take into account the two issues, which is the moratorium from Qatar and the Iran perspective, at least in a few years, not now, then, is a market which is difficult to predict whether in 2022, 23, there will be an oversupply or an undersupply.
Okay. I'll ask one more question, and then we'll try to have a couple of minutes for audience questions. On the demand side, this came up a little bit at the earlier panel this afternoon. There's geographic demand, there's regional demand, but there's also sector demand. Can each of you maybe just quickly address, how big of a role transportation demand, shipping, bunkering for gas and LNG, how big of a role do those new demand sources have in balancing the market? Are they this or,
is a shameless plug for our project that we're looking to develop in Cork in Ireland. A big driver for that has been the port itself looking at LNG bunkering. It has a large cruise liner position there. And so it's been very, very interested in what it can do in terms of offering more LNG services within the port. And then there are two companies, I'll plug them, Flowgas and Calagas, both of whom have LNG fleet vehicles and distribution, one in Italy, one in the UK. Both have LPG in Ireland, and again, the approach and the interest to do more than just put it into the grid and send it to power plants is quite extraordinary, and the governmental support on that quite exciting. So I see it as a major opportunity now for folks like ourselves.
You guys?
Yeah, I do think there is now an acceleration on the LNG bunkering side and on the smaller scale side. I think we are also readying ourselves on especially in the Baltic Sea, as we take 3 million tons from Yamal in Zeebrugge. We take some LNG from our own plant in Porto Valle, and etc. So that and the smaller scale of things is coming, and we will have our own FSRU in Kaliningrad, which we are going to inaugurate later this year. So there is a set of assets, and then we can work on that. But the critical thing for bunkering is going to be the infrastructure, the pace of development, and the globalization of it. But we see more and more actors from Singapore to the US starting to play into it and putting some money into developing infrastructure, commercial offers, technology, and all that. What's happening? The other thing which I believe quite a lot of is a smaller scale of LNG is like you chip in from a large FSU or FSRU and you go into secondary markets. And that's what is sort of the next stage of the developments in sort of the west coast of Africa and etc. If you start to have a bit of infrastructure around a few countries, whether it's Ivory Coast, Ghana on the import side, maybe Morocco, and then South Africa, etc. in a few years, then you can see additional incremental upside in terms of demand that is not insignificant, and will aim towards regionalization of bundles of markets, probably with the usage of smaller vessels, so that effectively you can address size without taking too much take-or-pay risk, and etc. And then you can see some pattern which can be replicated, what Singapore is trying to do with the islands on the south and west and east, etc. And then this bundle of, and probably this demand, which is all that mostly by power generation, has a great potential, and is also slightly less risky, but because the unit of investment is slightly lower, but it's still quite complex to achieve regulatory-wise and development-wise. But
the clock is telling me we might have time for one or two quick questions from the audience. Or, is there anybody who has a question for any of the panelists? There's some. Please, wait, she's coming with a microphone. You can identify yourself.
Ron Howard from Turner Mason and Company. I was wondering if any one of you would hazard a guess on what share of the bunkering market the LNG could garner by, say, 2030.
Honestly, I wouldn't know.
I think we have to read the Shell Outlook.
Yeah.
That's the Bible at this stage. But,
no good guesses on that.
can't guess.
Any other questions? Is there? I can't see. I'm blinded here. Okay. Well, if not, I want to thank the panel for a great, lively discussion. Thanks for listening.